Hello, welcome for the module number 5 practical problems regarding the cash flow statement. Cash flow statement is all about the consideration of how much amount of cash inflow and cash outflow during the particular year. For that, a company needs to compare the two consecutive years data to identify that the what amount of cash flow in and out from the comparisons. So in that case, we were already discussed the part of fund flow movements and fund flow changes in the earlier module. In fund flow cases, we want just identify that how much amount of fund comes in and goes out from the business, and that we were evaluated on the basis of a certain criteria. And from that comparisons, we would just get an idea the fund has actually comes in the business from the different sources and to be utilized for the particular object. Here, instead of the fund movements, we are going to compare and find out the changes of a fund in the format of cash. So that means the what amount of cash comes in the business and goes out during the year with the different type of comparisons. And for that, the company needs to identify the whole transactions for the two consecutive years. And for that, the company needs to comparisons of the financial statements. For that, the company will compare the financial statements of two consecutive years, and that requires balance sheet as well as the revenue statements and the revenue informations. Along with that, sometimes they need some additional informations also, which are actually occurred the transactions during the year but may not be actually recorded in the books of accounts. So this all the informations would be available for find out the movement of changes in cash during the year. How to solve the cash flow statement problems? That's a big problem. That's a big issue. Because of there are some certain sequence, there are certain ideas to solve out the cash flow statements in an easy way. Here I just want to mention one more important thing, that according to the accounting standard 3, company has to prepare cash flow statement as per that format. So we are solving the problem of cash flow as per the accounting standard 3 only. In the theoretical segment, we were already discussed the format of cash flow statement in the particular part. So the same format we would be applied here to solve out the cash flow statement problem also. But before I start the solution of the problems, I want to discuss with you that which are the steps for solving a problem of cash flow statement. So here there are certain steps for the solving of cash flow statement problem that we will just start that consideration. The steps for solving problems regarding the cash flow statement. So in this case, the cash flow statements we need to identify, and we can start by the first step is preparations of ledger accounts and adjusted profit and loss account. So first we will start with this particular ledger accounts and adjusted profit and loss accounts. Why we were actually starting the questions from this? Because of the cash flow statement we are preparing as per the accounting standard 3. So in that format itself only, the whole structure has been divided into 3 parts. That 3 parts is a part of a financing activity, part of an investing activity, and part of an operating activity. So operating activities changes occurred would be recorded under that direct activity. So that means whatever the changes has been occurred in the part of changes in working capital would be directly reflected on that. So in fund flow statement we were prepared a working capital statement, but here in cash flow statement, instead of preparing a working capital statement, the changes of working capital directly affected to the cash flow statement. But adjusted profit would be determined through adjusted profit and loss account only. So that's why we began the cash flow statement problem with ledger accounts along with the adjusted profit and loss account. So first we will identify from the informations which are given in the question, and from all these informations would be identified which are the necessary ledger accounts is prepared. So identify the ledger accounts which are required in this particular question, as well as along with that adjusted P&L account would be prepared. So these are the first steps. The second thing is we need to identify the information regarding ledger accounts as well as adjusted P&L account informations would be recorded. So now we identified the informations regarding the ledger accounts as well as adjusted P&L account would be write down in the respected accounts. So start with the opening and closing balance of that, then the adjustments effect, all. Then the next step is we will identify all adjustments. So adjustments effect will give it in particular ledger accounts as well as in the adjusted P&L account. So the next is after the part of informations regarding the ledger accounts and profit and loss account, adjusted profit and loss accounts, moving to the next part is all adjustment effects would be given also into the necessary accounts. Simultaneously we will mark it also, mark all items which are recording, which are going to record, which are recorded in cash flow statement also. In cash flow statement also. So in that sense, which items, certain items may be recorded in ledger accounts and adjusted profit and loss accounts will affect in cash flow statement also. So we'll mark the certain items which are recorded not only in ledger accounts and adjusted profit and loss account but also affected to the cash flow statement also. So these are the steps regarding the part of cash flow informations. And the last item is close the adjusted profit and loss account and find out adjusted profit. Find out adjusted profit. This is a very important part in the first segment. So in cash flow statement, the first segment is going to over here. After preparing adjusted profit and loss account, we will close the adjusted profit and loss account, find out the adjusted profit, and that adjusted profit would be recorded in cash flow statement. So the cash flow statement begins with this adjusted profit. Here I just want to mention this adjusted profit is considered after depreciation, but before tax, So this is to be considered that the profit of adjusted P&L account would be considered after depreciation but before tax. So this is your first part of the consideration. Now after this particular consideration, we'll move to the next part, that start with the cash flow statement. Start with the cash flow statement as per accounting standard 3. And under this accounting standard 3, this would be divided into 3 parts. The first part is operating activities. First part is operating activities. So under this operating activity, point number 7, we'll start with the adjusted profit after depreciation, before tax. We will find out the changes of working capital would directly affected to the adjusted profit first. After the changes of working capital affected to the particular segment, then we will identify the how much amount of tax liability paid by the company during the particular year. So after the changes of working capital deducted and added, next is we'll deduct the tax liability paid by the company and then find out the net amount of changes under this operating activity. So find out the changes under this operating activity through these transactions. The transaction is what? The first is adjusted profit. From adjusted profit, we will add and deducted the changes of working capital, and then we will identify the how much amount of tax liability paid by the company during the year. Deducted from it, the net amount of changes would be considered as the changes under the operating activity. So this is your step number 7. Then the step number 8 will identify the amount of changes in case of investing activity. So under the change of investing activity, we need to identify the how much amount of fixed assets purchased and sale during the year. Not only fixed assets, along with the investments. So what would be the changes in fixed assets and investments during the year would be considered under this investing activity. In case of there are some purchases of fixed assets and investments would be considered as a cash goes out. so cash outflow. But in case reverse, during the year if you sell fixed assets and investments, cash comes in, so that is your cash inflow. We need to identify the changes of this inflow and outflow and find out the net changes under the investing activity. So that is your step number 8. We need to identify the changes under the investing activity. So after we find out the investing activity changes, moving to the last step, the 9th step, and that is financing activity. So in this financing activity, company need to identify that what amount of changes occurred in their capital structure. Along with that, if they paid any dividend or interest also. So in case if the company have changes in their capital structure, like they during the year issued equity shares, preference shares, debentures, or maybe redeemed their debentures and preference shares, in case of they borrowed bank loans and financial institution loan, or maybe during the year they paid dividend, interim dividend or interest paid, anything regarding this particular part would be affected this financing activity. So need to identify the net changes of the financing activity at the end of the particular year with the comparison of the previous year and find out the net changes under this financing activity. So this is your step number 9. Your step number 10 is we need to identify after the changes of all these 3 activities, we need to find out the net changes of all these 3 activities. Net changes of all these 3 activities. And these 3 activities changes would be affected directly to the opening and closing balance of cash and bank balance. So we need to identify the changes of all these 3 activities. It's your next step. And the last step is this changes, net changes of all these 3 activity would be, and this consideration, opening cash and bank balance add into these 3 activities, net changes of these 3 activities, that the closing comes, that closing balance would be your answer, and that is your cash flow answer. So in that sense, the amount of changes would occur in the last step, the how much amount of your opening cash balance and bank balance would be added in the net changes of all these 3 activities, and comes the end balance and comes at the closing balance. That closing balance should be tallied with your balance sheet closing balance also. If it is done, it means that the whole steps and the system which you are actually follow, that is perfect. So the cash flow statement is all about equations of the changes of cash in and out during the year with the comparisons of previous year. These are the steps for solving a cash flow statement. I requested to all of you refer your practical problems regarding the video lectures. In the case of that particular segment, first problem we are going to discuss over here. For that, in the first problem, if you are going to see, we have 2 important things in the question. That one is balance sheet of the OM Limited. That balance sheet is given for 2 consecutive years. So we have informations for 2 consecutive years balance sheet, as well as we have informations of a revenue statement also. That means we have a profit and loss account of the current year. So from the current year profit and loss account, as well as the 2 consecutive years balance sheet of the particular question, from these all informations we are supposed to prepare here the cash flow statement. So here in this cash flow statement we would be getting an idea the how much amount of cash in and cash out during the year from the particular transactions. We have one more informations also, and that information is company sold out building during the year, the cost price of which was rupees 36,000. We would be getting a more idea from the revenue statement whether it was sold out at profit or at loss, and what would be the selling price. That would be getting an idea from the informations from the revenue statement. And they ask at last, you are requested to prepare a cash flow statement. But as we already discussed in the steps, that for preparing a cash flow statement we will follow the steps, and under that particular steps required we will just identify the how many ledger accounts are required, as well as we will prepare along with the ledger accounts adjusted profit and loss account also. So here that particular part of the considerations we will just try to identify the few accounts. That the three accounts are there. One is building account, because of we have an informations of depreciation in building account. Then provision for depreciation account. Then provision for taxation account. And one more, that is adjusted profit and loss account. So these are the four accounts which we are going to prepare. And from these four accounts, let's begin with the recording all the opening and closing balance of the respective account. First, identified the opening and closing balance of building. Building opening balance is 180 and closing is 288. To balance brought down 1,80,000 and balance carry forward, it is 2,88,000. Just confirm. Yes. Then we have opening and closing balance of provision for depreciation, that is 60,000 and 66,000. But opening balance is recorded in the on the credit side. So credit balance is an opening balance, that is 60,000, and debit balance, it's a closing balance, balance carry forward, and the carry forward balance is 66,000. Then the another is provision for taxation. Provision for taxation is also a credit balance. So opening is credit side, that is 6,000. By balance brought down, 6,000 rupees is opening balance, and to balance carry forward, that is your closing balance, 6,600. 6,600. This is your opening and closing is provision for taxation. And one more account, that is adjusted